Environment, society, and governance. These issues concern all of us, impact each of us, our very society, the economy and the markets and the countries that we live in. Yet at the same time, for every conversation around ESG, there is a lot of noise, clutter, and confusion of what is ESG. This weekly show from My Take will bring you experts from around the sectors in India who will demystify this topic, ESG. We will dive deeper into what lies ahead in the space from the Indian perspective. Welcome to a brand new episode of My Takes, That ESG Show. I am Srinath Sridharan, and today we have a wonderful guest, an articulate guest, Mr. Nilesh Shah. He is Group President and Managing Director of Kotak Mahindra Asset Management Company, and he is also the Chairman of AMFI, that is the Association of Mutual Funds in India. He is also a member of Mutual Fund Advisory Committee and part-time member of Prime Minister's Economic Advisory Council. Welcome, Nilesh Bhai. Thank you so much for agreeing to be with us. Thank you.
Thank you, Srinath. It's my pleasure to be part of the show.
Thank you. So we look forward to our conversation today on ESG and your views on it. And it is a very important and coincidental that Kotak Mahindra Asset Management is the first AMC in India to sign UN's Principles of Responsible Investment, PRI. Congratulations on that, first of all. And actually, what prompted you to do so? I mean, in a market like India, where we say that market shallow, it is too little way ahead, what prompted you to do this?
So there are multiple reasons. It's not that governance was not part of our investment framework. It was always there. Number two, environmental and socially, things are changing globally. And we have seen that companies which have better ESG scorecard, they tend to get higher valuation. And companies which are on the wrong side of ESG scorecard, they tend to get lower valuation. So it was not only from consciousness point of view where we believe following ESG standards is good for the society. It is also from our selfish commercial point of view that we believed ESG will deliver better return to our unit holders.
Pandemic has definitely impacted economy, a larger economy globally, not only in India. There is slump in investors' confidence or yo-yo in investors' confidence. But we definitely have excess liquidity in the market, as our market bull run seems to indicate. And you had also recently articulated fantastically about this. So is there any element of ESG in all these investments which are rushing, or is it simple mad rush because of excess liquidity?
So today, one can justify the same thing in a multiple perspective. And there is no correct perspective unless until we have the benefit of hindsight. In my opinion, market is positively looking to a couple of factors. One, they believe third wave will be much less ferocious compared to second wave. Vaccination, improvement in healthcare infrastructure, and COVID-appropriate behavior by people will ensure that third wave will be less ferocious. This will result into normalization of economic activity. And the government and RBI both will continue to provide fiscal and monetary stimulus, which will ensure that this normalization happens at a faster pace.
But agar simplify karni hai about the word ESG for retail investor, how would you describe what is ESG?
In a very simple, commonsensical word, ESG is about investing in those businesses and companies which are governed properly. Will you marry your daughter with a crook, or will you marry your son with a dishonest person? Answer is no. Then why will you put your money with a crook or a dishonest person? The same way you want a good bridegroom for your son or daughter. As fund managers or as investor, you should also go to a good person. Then comes socially conscious businesses. Now we have seen that there are groups which have survived hundreds of years, and most of them have survived because they are aware about communities around them. For many years, Tata still was having a slogan और इस्पात भी हम बनाते हैं. We also make steel. Their advertisements are always talking about what they're doing for the business, for the community, for the society. And that's one of the reasons why Tata Group have such a good longevity. They have such a good goodwill. So we want to invest in companies which are socially conscious. They are taking care of community around them. The third thing then comes to environmental side. Now here there are challenges. There are companies which are polluting environment and making money. There are companies which are not polluting environment and making money. Now we need to invest in both of them. However, what is important is that companies which are polluting today, are they moving in a direction where tomorrow pollution will be less? Tomorrow they will be more environmental friendly than what they are today? Answer is yes. So by using this environmental, social and governance model, we are essentially trying to invest in good companies which are making tomorrow better than it is today from society and environment point of view.
Thank you. But if I were to take off from, are there any learnings from history? The traditional Indian businesses were always very careful about sustainability. If we go back 100, 200s of years, we have always been conscious of ESG, but not in the formal way. And somewhere we lost it in between. And now there are frameworks that are coming back. So are there any learnings from the past that strikes you as very, very important, more colloquial learnings or native intelligence?
Today, when we look at our Ved, Upanishad and ancient literature, it has lots of things about science. The law of gravity, discovery of atom, all these things were discussed in our Veds and Upanishads. But then the modern science reinvented it with a far better scientific approach. And hence we give credit to Newton for gravity. We give credit to Galileo for telling us that the sun is at the center of our universe. But our Veds and Upanishads had talked about it long before. So in some sense, we give credit to modern science because they are presenting the older facts discovered by us in a more scientific manner. The same analogy can be applied to ESG. Companies have delivered return to shareholders by becoming better governed, by becoming more conscious on social side, and by contributing for a better environment. Now, ESG is formalizing this. It's giving a measurement through which you will be able to measure whether these companies have better governance, whether they are more conscious socially and environmentally. Now, the challenge for fund manager is how do you apply this? There are different benchmarks for different countries based on their evolution. For example, in Western world, a child labor is banned. They can afford to do that because there are various, safety nets prevailing in Western world to ensure that a child need not do labor work. Now, can we apply that blindly to India? I had gone to visit one company and I was chatting with them about ESG, and the issue came about child labor. And the CFO of the company asked me, Nilesh bhai, chai peena hai? I fell into the trap. I said, yes. He said, yahan ki ready-made chai nahi peete hai, tapri wali chai peete hai. He took me out of his factory gate. Outside the factory gate on the opposite side, there was a tapri. And he waved 2 cups of tea. A chotu came, maybe 12, 13 years old, with 2 cups of tea. Then he asked me, that why don't you inquire with this chotu? Why is he working over here? And why is he not going to school? And I knew I was getting into something, yet I had to ask. And the chotu replied, Sab, मैं अपने भाई बहन का गुजारा कर रहा हूं. It happened that his parents had died and now he was the elder of the family. And by working in that tapri, he was taking care of his younger brother and sister. Now, if I apply global standard of child labor, I will be depriving that family of income. I will be depriving that family of future. I cannot apply blindly that child labor law over there. So we have to modify ancient practices of environmentally good, socially responsible, and properly governed to suit our requirement, to suit our situation, and apply.
So if we have to wrap this with saying, if you had a wish list around ESG space, no constraints at all, no resource constraints or no regulatory constraint, how do you see India ESG space, say, in about 5 years from now?
I think there will be no ESG space in India because everything will become ESG. ESG today is a concept. 5 years down the line, this will be the main investment theme. There will be nothing called non-ESG because everyone by default will become ESG. Today, ESG is being pursued by institutional investors. Tomorrow, ESG will be pursued by all investors. Today, ESG in many companies is ticking the box. Tomorrow, ESG will be of life for corporate India. Today, if you are not ESG compliant, you still are able to raise capital. You still are able to attract certain set of investors. Tomorrow, if you are not ESG compliant, you won't be even able to raise capital. Forget equity capital, you won't be even able to raise debt capital. That's the transition which is going to happen, where ESG becomes part and parcel of center stage of any investment decisions, whether it's equity, whether it's hybrid, or whether it is debt. Society would like to live better tomorrow for their next generation than today. And every company will have to work towards that in terms of social responsibility, environmental consciousness, and better governance.
Before we wrap this up, a last word of advice from you for retail investors. What should they look for in their investments into ESG portfolio?
To retail investors, I will just convert entire ESG in one word: quality. When I was very young boy, just starting my career in stock market, there was a Dagladhari Kaka on Dalal Street. And at the corner of Dalal Street, there is a famous restaurant, Dwarika, which gives very good samosa. So one day that Kaka told us that, you don't take Vasi samosa from Dwarika to your house. All you want is a hot samosa. Now, the same principle should apply in your investment. Why will you take kachra stock to your home? You only want to take quality stock to your home. Like you don't eat Vasi samosa, you don't take kachra stock. It's as simple as that. Now, quality stock will have contribution from environmental side, from social side, from governance side. Without that combination, a stock cannot become quality. So for retail investors, whenever they are looking to invest, they should simply ask two questions. One, will this company be in existence after 10 years or so? And second, will it make more money 10 years down the line than what it is making today? If the answer to that in terms of existence and profitability is positive, then please go ahead and invest in that stock. Your answer obviously will take into account whether they're environmentally responsible or not, socially responsible or not, and are better governed or not.
So with that samosa anecdote for stock and ESG investment, thank you, Nilesh Bhai. It was fantastic having you and share your perspective. Thank you so much. If you enjoyed this conversation where we had chai, samosa, India investing stocks, and ESG with Nilesh Bhai, follow the space and subscribe to My Take channel on various social media. That's My with a double Y. This weekly show will bring you experts from various sectors to share what ESG means to India. See you next week.